Hi, this is Mark with your analysis for the week commencing the 9th of December. Before we go into this week's analysis, just want to have a look back on last week and show you some of the clues that we look for to keep us out of trades as well as to get us into them. I said to you last Sunday that prior to the market open, I suspected that we were going to see lots of sideways movement, small moves, small moves, small moves, news announcement, bang, and it's exactly what happened. And this is why I always warn you not to take trades around major news announcements. This, for example, was the Euro USD news. There was a hint in the press conference after the interest rate announcement, and the hint is that there could well be a cut in interest rates next month for the euro. The euro shot down, and therefore, because of correlation, the dollar Swissy shot upwards. However, during the week on Wednesday, I had said somewhere around here, look for a potential pullback up here to around 92.85 for a short. And it did. I think it was the very next candle or two came up, touched the area, moved down. Only 20 or 30 pips movement. Now we have a ton of news again this week, and we have the Greek announcement on Monday. We've got the Fed on Tuesday. There's a lot going on, and once again, I suspect we could be on for this ranging markets, followed by explosive moves. The good thing is this is the Euro USD. Now the Euro USD last Sunday at market open simply went through 130 and it was on its way up. A very simplistic chart. You can see the candlestick pattern here was suggesting a reversal back down. Price came down prior to the news and stopped to the pip on this trend line. News comes out, perceived to be bad for the euro, bang, off we go. What does it do? It stops to the pip down at this lower line that we've had in place now for over a month. Why? Because every trader and his dog was watching the same area. So once again, let's have a look on the euro on a daily chart. I was cautioning on Wednesday. I said I would not be looking to take a long in its current position. And the reason was this is a double top scenario. And previously, if you look over to the left, with a double top, treble, multiple top, around this area. Price has previously reversed every time it's come back up here, and even on the daily we have a reversal pattern, and price then moved back down again. Euro yen, I said on Wednesday I would not look, even though price was trying to break this upper area, I wouldn't take it. Why? Because it's a multiple double top again, and it's bounced back down. And what I said was I would look for a bounce at 106. It did it almost to the pip again after the news on Thursday's fall, and then a further fall on Friday. Why has it bounced to the pip off this line? Because everybody's watching it. You get the drift. Dollar yen, similar scenario. We're looking bounces up at 82. It did go through, but it then bounced back up. Stopped to the pip. Double top scenario here. Now you can, of course, if you choose, be a swing trader. What a swing trader does is places an order when price is coming up to these areas, half stake, and then takes looking for the fall. And the dollar yen has been a bit messy on the lower level, but that's what we seem to be in once more, is one of these ranges. This is the CAD, and on Wednesday I suggested that although we were looking for an overall break and close below 9900 because of the monthly trend line and previous support and resistance, look around 9930 for a potential pullback with the view to a more aggressive entry. Aussie dollar, I showed how early last week price came down and bounced off 104. Where did it struggle? Well, it struggled big time at 105. Why? Because it's done it there before, and it's a major psychological level. Final one for now is the British pound. We were up here last week. I said I wouldn't long in its current position. We were at 78.6 fib on the daily, and look at this. 1, 2, 3, 4 occasions price spiked and tried to break this area and failed, and therefore that is a rejection at that point. What did it do Friday after the move? All the way down, logical area. Where did it bounce off? 160. Not only is it the whole number and previous major support and resistance, you also had the added confirmation in there of the 55 EMA. So whilst things may appear to be difficult, major areas are being respected, but you have to tiptoe around the news once again for the week ahead. This is the USD CAD, and last week I went into great detail explaining about the potential breakout of a triangle and a major trend line, and it happened. Price has closed outside and below 9900, and outside of this trend line going back from September. I explained that the potential move here from this triangle break is approximately 600 pips, or so the theory goes, and therefore that would take us down around 9,300. We could be on for a massive move here. So what do you do if you've missed the entry so far? Well, last week I showed you on Wednesday how you could look for potential pullback to 93.30, and the more conservative entry was a break and close below 9,900. If you're not in already, the way I would play this is as follows. I would place half my order just below 9,900, and I would place the other half of my order at 99.30. That way, if we only get back to here, then I catch part of the move. If it's a bigger pullback, then I get into profit quicker. Euro USD on a monthly, and I was showing you how it looked as though we were going to break this monthly trend line. However, trend line breaks are not valid until candles close, and of course we have another 2 or 3 weeks for this one. What's it done? It's turned back down again. Now, I haven't traded the euro much in recent weeks. I have preferred the Swissy, and I do so again this week because to me there are more reasons why I want to enter the Swissy than the euro. However, if you are looking to trade the euro, 130 is the obvious first area, and therefore you think in terms of a pullback for a short. However, on Monday there is at some point, and that's the scary bit, some point there should be an announcement by the Greek government about the success or otherwise of their bond buying on Friday. That is likely to send the market hundreds of pips in either direction. So you need to be ultra careful anything to do with the euro next week. If you're going to trade bounces once the dust settles after any news announcements, then I showed you earlier this is how important this line has been, and the obvious one back up at 130. So if you're going to trade intraday, be looking for clues on 4-hour charts for bounces off these areas. Now, this is the Swissy, and as I just said to you, I prefer the Swissy this week because we have multiple reasons for me to want to take a trade. 9400 was previous major support and resistance going back to September. It is a whole number, and the Swissy seems to react more at whole numbers than most pairs. It is 61.8 of the recent move just above, and therefore I am interested to short this pair at 9400. When I talk in terms of going down to smaller time frames for clues, then as the same as last week, you look for EMAs, you look for fib lines, you look for price going outside Bollinger Bands, you look for candlesticks, all kinds of clues. So if it starts to come up to 9400, it's outside of a Bollinger Band, we get a reversal candle, then I will enter. Dollar yen on a monthly. Now the yens concern me. This is dollar yen on a monthly chart. This has been a major line in the sand, you could say really 8300, and this is why I didn't want to long it last week in its then current position. Until or unless this breaks, then I would leave the yens alone, all of them at the moment. You need pullbacks. Here we have the dollar yen on a daily chart. If you're wanting to trade intraday for small ranges, then by all means consider longs at 82 and shorts at 82.80, but it's a small range, but that is one of the strategies you can use. Again, be very careful around any news announcements, particularly the Fed on Tuesday, I believe it is this week, Wednesday. Euro yen, similar scenario. Could be that we're going to carry on bouncing, and in which case 106 is the area. However, look at this. You've got the 5-8 cross forming. It's not actually formed straight away, but it's almost there. We have divergence on MACD in that price is going up here and going down on MACD. I have a horrible feeling this may pull back further, and therefore for me I'm going to leave this one alone. If it pulls back all the way back down here around 103.40, 50 area, this 55 EMA, then I will long this pair. This concerns me more, but again, if you're going to look for bounces, there and there are the obvious places. Similar scenario with the Aussie dollar yen. I said last week look for bounce at 85.50. You could be looking for bounces back down here, but the real big area here, if we're going to get a pullback, is 84.70. Aussie dollar finally caught this last week. I showed you in Wednesday's update how and why, and this once again was a case of looking for clues on 4-hour charts. If you've missed it, then the area again is 104, 104.20 on this pair. That's the weekly trend line rather, that goes back to May, and it has held on each occasion so far. And if you look on the daily, you also have a scenario here in the same area. Around 104, you have this 55 EMA coming up. So this 55 EMA will be around 104 at market open tomorrow. It's also 50% fib of the recent move, and therefore if you're looking to trade it, that will be the major area I would look for an entry. Now its current position 105, I wouldn't take a trade. I would want a clear break and close above. Final option, of course, if you're going to swing trade, is look for clues to short here with your stop just above the recent high. Euro pound, we had the reversal last week. I'd said a short, potential short 81.50, and therefore your entry at 81.40, and that worked perfectly. And had you stayed in this trade, all you needed to do was place your stop just above the recent high, move your stop to entry on Thursday with the Euro news, and FOMC worked in your favour as well, and you had a decent move on this for a change. Now the main area in the sand once again for me is 80, and I just put the fib on, and not only is 80 previous major support and resistance and a whole number, it is also almost to the pip 78.6 of this recent move, and therefore that is the area. And if the Bollinger Band stays the same, that gives me even more reasons to think it will bounce back up here. Final one is the British pound. 160 held again last week despite a major attempt to move up. If price comes back down to 160 again, then consider a long there. Let's have a look at this on the daily chart. And on the daily chart you have the added confirmation of a 55 EMA, so 50% fib. Multiple reasons. One concern of course is this 5-8 cross. If price starts to move and break down, then you may have a potential problem. If it does break and close below there, the counter trend trader would look for a pullback short. Personally, I would be much more interested to long at 5900. So I'm initially going to long at 160. If that fails, I will look to long at 15900. And again, we have multiple reasons. We have the weekly 55 EMA, the daily 200. We've got a fib in there. There's a lot going on. Those are the main areas for me. Final option, if you're going to swing trade, is a bounce back down at 160, 100. It's not all doom and gloom. There are trades to be had out there. You just need to be a little bit more careful, and you have to analyse the situation perhaps more than you would normally do so. However, if we get some trends returning, you will be amazed at your newfound skills. Have a good week.